Let's bring in Maruresh Joshi, fund manager at Angel Broking, to share his views and perspective on the markets as well. Maruresh, morning. Thanks for taking the time out today. The pre-open's been suggesting that the markets possibly could start off a little bit on the higher side by nearly 0.3%. Reliance Industries is a big one that we're watching out for. 3% in the pre-open higher. Maruresh, what did you make of it? And more importantly, at 940, 950 where it's likely to open, what's the outlook?
Morning, Priyank. So clearly, I think Reliance numbers on the operational front have been a clear beat. GRMs much higher than what the entire street was expecting. Both in terms of EBIT margins, I think the petchem numbers more or less in line with estimates, so a little bit better than what we were probably expecting, at least on the absolute EBIT front. Having said that, I think the telecom capex is something that one really needs to understand on how Reliance will progress in the next few quarters to come. A huge amount of capex has probably gone through, 92,000 crores, which has actually taken off the net debt on the consolidated basis beyond 85,000 odd crores. Having said that, probably I think the petchem and the refining business is expected to do well, even if one probably assumes Singapore GRMs staying in the range of 6.5 to 7.5. Reliance should be able to comfortably beat that the higher end of the margin by at least a couple of dollars. So 9.4 to $10 is something that we're probably estimating for FY16, FY17, and even higher once the off-gas cracker starts coming through. So the petco gasification would aid GRMs. The off-gas cracker, which happens in FY17, would definitely aid petchem margins. The telecom part is an unknown at this point of time, but they are able to successfully unlock value over the next couple of years. Reliance is expected to do well. So again, I think on a 2-year time perspective, I think we remain extremely optimistic and bullish on Reliance Industries.
The other one, then HCL Tech, Maruresh as well, that's been in focus, and the pre-open is seeing a cut of nearly 1.2, 1.3%. Numbers is coming out in the last few minutes. What do you make of this one?
So clearly, I think after the profit warning, more or less in line with estimates, but if you really adjust the $18 million hit that it was supposed to take, I think the numbers appear much weaker, at least on the EBIT front. So I think the EBIT margins at 19.5%, I think more or less in line with what the streets were expecting. But clearly, I think it is about the management commentary on how they perceive their business verticals to perform going forward. So the infrastructure management services, which has been a key driver for HCL Tech, that has to do reasonably better, and the management commentary thereof would be key. The application services, again, I think in constant currency terms, have grown very tepidly. The US markets have grown very, very tepidly for HCL Tech. Europe has basically stood out, and the rest of the world probably does not contribute in terms of the EBIT front, even in the last quarter. In this quarter itself, again, a little bit disappointing on that front. So what happens probably with the US markets, with client growth, and again the TCV wins have been pretty impressive. So engineering services is something that I'll watch out for. So yes, numbers disappointing. I think the stock might open on a very weak note, but clearly management commentary is going to be the key on how the stock might perform going forward.
We've got 30 seconds, Maruresh. Any word in terms of which one would you pick from the top IT pack now that you've got 3 of the majors already reported earnings?
So clearly, I think we're still maintaining our buy recommendations on Infosys and TCS. TCS with its strong order book, 30% over the best order book that it's got, I think still holds good value. So clearly, I think Infosys, TCS, and I think I'll be closely watching out for HCL Tech's commentary, because I think if the commentary is more or less in terms of the business outlook is what headwinds the IT sector is facing generally, I think over a 2-year perspective, the valuations at this level will become extremely attractive. So I think commentary would be key, as I said, but Infosys, TCS at this point would hold key for IT companies.
All right, Maruresh. Hold that thought. Let me get the opening codes going as well in terms of the way the markets have been panning out and what we're tracking as far as the live quotes are concerned in regard to the way the Nifty and the Sensex are shaping up right now. 0.3% higher is what we're seeing in the pre-open as far as the indices were concerned. Reliance Industries was up nearly 3.2, 3.3%, and it starts the day off with a move higher of nearly 3.5%, but not crossing 950 as yet is what we're seeing as far as levels are concerned for RI listed. So keep an eye on the 950 mark, which again has been a crucial resistance, while HCL Tech on the other hand is collapsing now, 2.3% lower is what we're seeing as far as that stock is concerned. Tata Motors down 1.3%. DRL and ITC also seeing a little bit of a cut. HUL, so defenses are getting somewhat hammered out here, while mining and metal majors again getting active. Vedanta is up 1.2, 1.3%. SBI getting some bit of traction. Ambuja, Axis Bank, Ultratech all active in on opening. Reliance Industries up nearly 4% now is what we're tracking, and you've got some of the other IT majors barring HCL Tech. There are seeing gains. Infi, Wipro are in positive, and TCS also seeing a little bit of a move higher. Beyond that, ONGC is also losing out. ZE, after that huge rally last week, is cooling off a little bit. ICICI Bank's a little soft. Bharti and Power Grid also are a little bit soft right now, but what we're seeing. But you've got a whole host of other newsmakers from the mid-cap space today, isn't it?
Absolutely. Let's take a look at some of those mid-cap names as well that are buzzing right now. Let's pull up the indices for you as well, get you a check of how we're doing this morning. We've got some amount of gains coming in, 0.3%, and Amtech Auto is the big mover. I actually pulled that one up for you. It's up 13%, and that's also on the back of news. So we were expecting an Amtech looking at solving that debt problem at JP Morgan. They've in fact appointed as well, of course, Morgan Stanley, EY, Grant Thornton to raise funds as well. Let's take a look at some of the other stocks. Jet Airways is up 5%. Continuing to see buzz in aviation, particularly ahead of the Indigo IPO. We've now got Go Air saying they might look at an IPO as well, according to some news reports. MRPL, Shipping Corporation, again seeing a bit of a move today. Mahindra Holidays up 2%. CESC, Shoppers Stop, some of the other names there on the upside so far. Market breadth seems to be kind of intact at this point. We do have some stocks sitting out though. A few of the other gainers though, Spice, talking about aviation, is also up about 9 to 10%. We've got Zodiac Clothing that's up about 13% right now. Lanco Infra continues to see action as well. Again, news continues to pour in on that counter with regards to how it's planning to, of course, solve its debt issues and also new orders and so forth. So that one continues to stay pretty much on top of the charts. We've also got Castex, again another 5% higher there on a Castex. Further gains coming in there on some of those small cap counters. On the downside, let's just take a look at what's sitting out today. We've got stocks like Jyoti Structures, Tata Sponge, Agrotech that are on the downside. HEG, Sikar Logistics cooling off. Remember, logistics saw a good run last week. In fact, if we just take a look at Gati, because it's expected to post numbers today, so just pull that one up for you and we'll just get a sense of how it's shaping up. Just flat ahead of numbers, but we will be watching out for that. We'll also be watching out for Blue Star, Mangalore Chemicals, Motilal Oswal, all of them on account of earnings. So do keep an eye on some of those stocks, which are a little quiet ahead of those earnings right now. Maruresh, talking about the mid-cap space, let me get a view from you as well in terms of any specific counters that you're watching out for. And we'll get to earnings in a moment. Let me first get your views on aviation, because again today we've got Jet and SpiceJet on a rally. We're now counting down to the Indigo IPO. We've got a very aggressive price band that's been set for that particular airline. What's your take on the space? Does it prompt you at all to relook at valuations in the industry?
Morning, Abba. So clearly, I think if you look at the aviation space, the Indigo IPO is causing huge amount of buzz into the market. But clearly, if you look at the structural nature of the industry, negative net worth, more balance sheets are not having sufficient cash flows, the load factors are still low, competitive pressures play on the pricing for most of these companies. And yes, I think the trigger for these stocks, at least from this quarter or the next quarter's perspective, would be the ATF price fall. So the ATF prices have crashed meaningfully, which means effectively that the EBITDA margins for a lot of these companies would show significant amount of upturn. It also means that the OPEX, because 35 to 40% of the total input cost basically comes in from ETFs, so that will mean a huge chunk of savings when it comes to the operating cost for a lot of these airlines. But having said that, probably I think structurally we do not believe that cash flows are a meaningful trend for these counters. I think they do not show consistent cash flow improvement over the years. I think in times of in weak times, in times of economic depression, I think we've already seen how these counters have performed. So clearly, I think economic recovery, GDP recovery, how load factors will perform, how the passenger growth will improve is key for this industry's fortune. So clearly, I think fundamentally still do not believe structurally, I think the growth engines are still there. But yes, technically, I think will not rule out, because I said as the factors roll out in terms of ATS, margin expansion, would be quite evident. So I think technically these stocks can still be played around with. Structurally, I think still don't see any structural improvement in balance sheets of a lot of these companies.
SpiceJet, look at the 1 year chart that we're actually seeing on the counter. It's had a one-way move, that stock. Just pull up the 1 year chart again for SpiceJet. Jet Airways is in positive. It's once again on a circuit as far as SpiceJet is concerned today, but that's the 1 year chart as far as SpiceJet is concerned. It's gone from a level of around 11.5 to 47.5 right now is what we're seeing in regard to the way the counters really panned out. It gives you a sense as to how much of a gain the counters just seen in the last 1 year itself in regard to SpiceJet so far. All right, that's as far as the aviation pack is concerned and what we're tracking in terms of Qs today. But beyond that, some of the other names, Amtech Auto is getting a little active today. Pull up that stock for you as well. 10% higher. Lanco Infra on the back of what we've got as far as a certain tax case is concerned, up nearly 7% is what we're tracking on that counter as well in terms of trade today. Era Infra is up nearly 4%. These are some of the mid-caps. Sri Renuka is up by nearly 4% as well. And Sun TV, once again, up nearly 1.6, 1.7%. Maruresh, which are some of the mid-caps that have been on your radar?
So Priyank, again, I think the same old lot. Bajaj Electricals is something that we continue to prefer. The BNP segment would continue to do well. Inox Wind is something that we like. Renewable energy focus of the government, margin expansion because of capex already gone through, would reflect positively in better margins and bottom line coming through. IOC from the OMC pack is something that we continue to like. I think the Paradip refinery that is expected to come out in phases over the next few months would add to the margins in a significant manner over the next couple of years for the company. And Aurobindo Pharma within the pharma space is something that we believe that the company with its strong NDA pipeline, the kind of acquisitions that it done specifically on the formulation business would continue to drive growth going forward.
Right. We've got a whole host of earnings also, Maruresh, that are expected in the mid-cap pack. I mean, we've had quite a few that have been out over the weekend and over late on Friday as well. So we're tracking those, but apart from that, a couple of these other stocks in news. Crompton Greaves, for example, selling further land to revive real estate. Bombay Dyeing is also selling further, was looking to sell and now not selling one of its textile units. So a lot of companies that are going in for these deleveraging plans. Any of those that are on your radar on account of some of those moves that we have been seeing strategically?
So again, I think out of the two, I think Crompton is something that we probably track, and the deleveraging efforts have been going on for some length of time. It's also heard specifically on the international power business. So any positive outcome therefore would have a significant impact in terms of how the balance sheet might appear. Yes, I think the overseas businesses are still struggling in terms of how the EBITDA performance might pan out. But clearly over the next couple of years time horizon, I think the deleveraging efforts are very much on for the company. And once they start coming through, I think the interest and finance costs come down significantly. So that reduces a lot of stress in terms of the interest and finance payments for the company as a whole. The consumer business is doing exceedingly well. So I think that is one business which is possibly held up for Crompton Greaves on a consolidated basis. So clearly I think we maintain our cumulative rating on Crompton Greaves with the assumption of a slow but a gradual economic recovery in the European markets and the deleveraging story continuing to reduce their debt efforts, which will reflect positively on their EBITDA.
All right, so just put up Sunil Engineers for you as well. The company's actually won an EPC contract valued at 474 crores. That's Sunil High Tech Engineers out there is what we're seeing. Stocks see a little bit of a spike on opening itself, 6 to 7% higher on the counter so far is what we're seeing on that stock. All right, now beyond Reliance as well, you've got BHEL and BPCL. The OMC pack also has been somewhat active in the last couple of days. Maruresh, this one's really been the big trade of the last 1 year or so. Do you still believe it's still a place one can go ahead and pick up stocks in at this level when it comes to OMCs?
In the OMC pack, again, I think the structural part of the story has more or less got played out. So with the reduction of crude prices, you've probably seen under recoveries, working capital constraints go off the balance sheets, a lot of debt being reduced. And again, I think the inventory losses that they faced in Q3, Q4 of last financial year probably are not that evident because I think of the stability that you've seen in crude prices. Having said that, I think the next leg of structural re-rating for these stocks would happen when the diesel marketing margins start paying off. But again, I think that will happen very, very gradually. And secondly, I think in terms of the throughput itself. So I think as I was mentioning, BPCL, HPCL are all in a sweet spot. But probably IOC with its new commissioning probably coming through would be in a far greater sweet spot because I think the refining margins probably would improve a tad bit better for the company. Again, I think one of the largest marketing companies in India. And clearly with a Nelson complexity of 12.2, I think you're going to see margin expansion from the 2.3% that they're posting. We're expecting at least a 300 pips improvement happening thereof over the next couple of years. So I think valuations around 1 time price to book seem attractive. So I think within the pack, if I had to choose something, Priyanka, I think IOC is something that I still prefer.
All right, Maruresh, we'll leave it there. Thank you so much for joining us and taking us through some of your strategies. Stocks in focus today.
Thank you.
RIL on the back of those earnings. What a rally we're seeing this morning on, and RIL expected completely surprised the street on late Friday afternoon. That's the stock that's moving from the heavyweights, and on the downside, of course, we've got an HCL Tech that's not looking too happy post its earnings, even though they were expected to be weak. Still, markets disappointed. In the mid-cap pack, aviation, that's where all the action seems to be, Priyanka.
That's right. Jet and Spice both showing huge moves today. Let's pull up those counters for you. Jet Airways 6.5, Spice Jet once again upper circuit of 10%, and then you've got Lanco Infra and Amtech Auto both buzzing in trade today is what we're seeing. And IFCI also getting some bit of volume going today. Stocks up by nearly 2% along with NIT. Another 3% gain on that stock is what we're tracking currently.
That's where we leave it on Street Smart, but do stay tuned, lots more coming up.
Thank you for watching.